Morning, everybody. Welcome back to the Opportunistic Trader. We're about a minute before the stock market open here. I just went over the opening levels. We're joined now by Phil Flynn of the Price Futures Group and Fox Business Contributor. How's it going this morning,
I'm
Phil?
doing good, man. Wow, it's been an incredible week and a lot of emotions up and down in the markets. And, I'm glad it's November because October was crazy.
Yeah, October was crazy, but for your main market crude that you look at, it's carried over to November. Have seen sharp declines over the last 4 weeks, and more specifically, the past, let's call it 5, 6 days. What's going on in crude, and where do we go from here?
I mean, they've been crushing this market for a multitude of reasons. I mean, in October, we started to sell off because we were worried about the global economy and the stock market, and now the market is going down because of some moves by the Trump administration, really to try to make sure the market's well supplied ahead of sanctions. The last couple of weeks, if you look at the moves by the Trump administration, not only have they been releasing oil from the Strategic Petroleum Reserve basically every week. Last week, they released another 1.5 million barrels. They overnight today announced that 8 countries are going to get waivers from the Iranian sanctions that are to begin next week. So all of a sudden, you had a market that, 2 weeks ago was at $77. People were talking about $100 a barrel because there wasn't a lot of oil in the market. And now you're selling off crazy because you think that the market's going to be oversupplied or well supplied, and you're driving down prices. You also had a report that U.S. oil production hit an all-time record high. Over 11 million barrels, and that the U.S. is the biggest oil producer in the world. But let's take a step back here a little bit. How do you go, in a few weeks from a market that is worried about $100 a barrel oil to a market that's now in the low 60s? I mean, what's true? I mean, one of them has to be right, one of them has to be wrong, or maybe you put the two together and maybe the truth is somewhere in the middle. Because let's take it one thing at a time. Let's first talk about the Trump waivers. Listen, one of the reasons why oil was going up the last couple of months is because we we're concerned that there isn't going to be enough oil in the global marketplace to replace Iranian supplies, right? Donald Trump used magnificently his pressure on Saudi Arabia to get them to try to raise production ahead of this. The murder of the journalist Khashoggi by Crown Prince Mohammed allegedly obviously put Donald Trump in the driver's seat, and he really put the full court press on Saudis to raise production, and they did it. Now, though, overnight, now we're hearing that there's waivers in the marketplace, and what that can tell me is that the market was right. There isn't enough oil in the marketplace to replace Saudi oil. I mean, the Iranian oil.
But the market price isn't telling us that.
Oh, you know why? Because the market's pricing in that there's going to be more oil on the market that they didn't think was going to be there. They thought we were going to be at zero exports, right? Let me ask you this, Mike. Why do you think they're granting waivers to the market? Why are they granting waivers?
I'm
Because
not
they
sure.
can't
Yeah.
they can't find the oil. That's why. China, India, and Japan, South Korea are on the phone with Trump. It's like, yeah, hey, we want to go along with these sanctions, but winter is coming and we don't have enough supply. So we can't find alternative oil. The Trump administration, Mike Pompeo and his guys, 3 months ago, were going into the global marketplace trying to secure supply so that these guys can comply. The problem is they can't find the oil. So they have to say, all right, guys, you can buy some, try to buy as little as possible, but because they can't replace it. You talk about a lot of supply in the market. There's a report that Russia production's going up. But you know what? Russia overnight is putting an export duty on oil. The government said that the high pricing and the extremely tight supplies of oil in their country is threatening for them to put duties on exports to attempt to prevent a winter price shock. Okay, so they're right now saying, hey, you know what? I know we want to, send out more oil, but we need it here for winter. China warned their western provinces last week that they don't have enough heating oil or distillate right now to go into the global marketplace. Okay, so so the Trump administration was basically forced to grant waivers, because they can't allow their allies, to be, to go through the winter cold. There's not enough diesel in the marketplace. Listen, think of what the Trump administration has done over the last couple of weeks when it's come to supply. They've released oil from the Strategic Petroleum Reserve. They got OPEC to produce more oil, right? They've done everything they can to juice up oil supplies in the United States, right? So where do you think, how much of a glut of oil do you think we have here in the United States? How much above average do you think we are for this time of year? Well, the 5-year average, the U.S. oil supply right now is only 2% above the 5-year average. That's it. That's it. And that's with us releasing almost 10 million barrels from the Strategic Petroleum Reserve. If we weren't releasing oil from the reserve, supplies would be below average. Let's talk about the shale oil producers. Shale oil producers, hey, they're producing a record amount of oil. They raised production, for the first time in a month, which, by the way, I think the government was holding back those numbers. How do you raise production? Production doesn't move for 3 weeks, and then all of a sudden in 1 week we jump 300,000 barrels a day. But let me tell you this. All right, let's assume that the shale guys can produce that much oil. There's still a question whether they can make money. Okay, the Wall Street Journal did a great article a week ago. 20 out of the top 20 shale firms that are producing right now, 15 out of the 20 were when oil was at above 70, were still losing money. They were spending more money than they were taking in to produce the oil. What do you think is going to happen to these guys when oil breaks $10 a barrel? They're not going to have any money to order any new rigs. They're not going to be able to continue to drill. So you're going to see a cutback in drilling. So I guess my point is, if we look at the big spike that we had in the price of oil for the last couple of months, it was overdone at 77. We thought it was overdone. But at the same time, I think the crash in price, and it is a crash. I mean, this is the biggest sell-off, we've had, in years, and, down 15%, from the high in a short period of time. Have the fundamentals became that, have we gone from being that bullish to that bearish like overnight? I mean, and unless you believe, Mike, that the global economy is just going to crash, and I don't see that happening.
Well, so that goes back to, I know that's what I've asked you a number of times, like, hey, what would it take to turn you bearish? And that's always been your kind of comment, is it's the global economy. But that said, we've dropped more than 20% in the past 4 weeks. That's a significant drop. And so it's got to be something that's, the global economy is a long-term sort of thing to look at. Like, how do you actually gauge that in a day by day or a week by week thing? It's more of a longer term trend sort of thing. And on a shorter term price action, we're at precarious levels here. Basically the whole year's been wiped out in the past 4 weeks.
But for every action there's a reaction, Mike. Okay, you can't have that kind of a price drop without it having reverberations in the marketplace. Okay. So when we had demand numbers that came out from the Department of Energy this week, we had some pretty bullish demand numbers. We had some of the strongest demand numbers we've ever had for this time of year. Okay, the reason for the price crash is because I think we had, the hedge funds were all long, right, and then they dumped all their positions and they're all short, and so we had a big run up, a big price up. But I'll tell you this, Mike, the last time we had, anytime you've had a price break like this in a short period of time over the last 10 years, should you be a buyer or should you be a seller? That's the question, and the answer to the question is you should have been a buyer. I mean, just recent memory, we go back to Memorial Day, right? We had not quite as big of a percentage correction, but we had a $10 break in oil. And a lot of people back then said, the end is near, get short. We were making new highs by the 4th of July. 4th of July, we had another $10 crash. Market went back up. Now this time you have had some of the biggest influences in the world conspiring together to crash prices. You had Donald Trump out there saying, listen, we got to get prices down, pressuring OPEC to raise production, pressuring everybody to, the shale guys to do this. They've thrown everything but the kitchen sink at this market to get supplies up, right? But you look at the numbers, they're not there. Okay, you can say, oh, they're going to be there next week or the week after, and we're going to have a glut of supplies, but I'm dealing with the numbers I'm looking at. I still, even if the Iranian sanction thing goes away, what is the price drop going to do for demand? You have the emerging markets. Everybody say, well, there was a talk out there saying, well, the countries, because of the strong dollar, they were going to buy less oil because their economy was struggling. And even though the numbers haven't shown up, eventually they're going to have to slow their oil demand. Well, guess what, guys? You just got a 15% sale, right? So these countries that wanted to buy oil but were having a hard time because of their currency, you just got a big price break. So what is that going to do to demand? Going into winter, supplies are tight. You're going to buy more. So I think, Mike, remember when the stock market was down, 600, 700 points that week, and, we started, October, and, if you looked at the price action, there was a lot of people that dumped their stocks, right, at the lows, and it looked terrible. It looked like the market was going to crash. But then 2 days later, the market's coming back up. I think oil is going to see that kind of V-shaped recovery before we know it. I know it doesn't look like it right now, but I remember last August, we had a huge break in the market and everybody thought, oh, the bull market's over. You're never going to get there.
Well,
but
then the other interesting thing about oil, what's
Yeah.
your take on this? Larry's actually long oil right now, and he thinks
Smart
it's
guy.
he thinks it's more of an election thing that, once the
Yeah.
election's over, Donald Trump has wanted lower oil prices and a higher stock market. And, the past 3 or 4 days, we've seen a higher stock market. But
He's a genius.
oil prices, have come down. He started talking about oil prices around the 70 level.
Yeah, both Larry and President Trump are geniuses. Some people would say evil geniuses. I'm not going to say which one. No, I'm just kidding. But no, I think you're right. I mean, it's we see these markets sometimes get too high and too low, and I think the election is a big part of it. And Donald Trump has made no qualms about going after OPEC for higher oil prices and criticizing them. If you remember, the 4th of July swoon was predicated by Donald Trump pressuring OPEC to raise production, which they did. The Khashoggi murder is put Saudi Arabia in a very weak position to take a stand against this price break. And so I think they're going to do, Donald Trump's will, but, just remember the Saudis were saying, a couple months ago that they were comfortable with $75 to $80 a barrel oil and that they thought 70 to 80 was a fair price. In other words, they need $70 to $80 a barrel oil. How many of these countries can afford $60 a barrel of oil right now?
Well, the other thing on top that I continue to
Yeah.
talk about, also forgetting where the actual price of WTI is in dollars, when you take a look at some of these emerging market currencies, like let's say Turkey, even Mexico, things like that, the dollar impact makes the oil prices more expensive when you're talking international.
It does. And here locally, it makes it weak. And that you're right. The dollar had been very strong. Even with the little break in the dollar yesterday, it didn't help the oil so much. But I think you're right. I think you're right. I think Larry's right. I think the election, the impending sanctions on Iran, all of that is really kind of playing into the bearish flames right now. And this perception in the market from we weren't going to have enough oil to now, my gosh, we're going to have a glut of oil. Like I say, the truth's probably somewhere in the middle. And so I think Larry's right. I think they've overdone the sell-off. I know when you get sell-offs like this in oil, it's hard to pick the exact bottom because they have a tendency to wipe you out one more time before they turn. But even if Iran keeps pumping the same amount of oil that they were pumping before the sanctions went into place, we still have the tightest market that we've had in 10 years going into winter. And the main reason, I know people are going to say, well, we got a glut of gasoline, summer driving season, that's a story for another day, right? What we need right now. I mean, when you have the Energy Information Administration basically saying heating bills are going to be higher because we have a tight market. You have Russia, saying, hey, we're going to have to put export taxes on because we want to make sure we don't export all our heating fuels to other countries. When you've got China basically warning that their supplies are tight, and you've got 8 countries going to the U.S. saying that they can't find other oil to replace Iranian oil, you have a tight market. And so I know President Trump came out and said, hey, we have enough oil to get through this, right? Well, if we have enough oil to get through it, why did you grant the sanctions? Because we don't. And that, to me, even though short term it's really bearish because of all the mania and stuff, short term it looks bearish, but the underlying story, what it tells you is that the market is very, very tight and they can't afford to lose these barrels as much as they want to stick it to the Iranians.
Yeah. All right. Well, hey, we'll keep a close eye on it.
Excitement.
The markets.
So excitement. Buy calls. Take an aspirin and call me in the morning.
All right. Well, we'll do that. We'll talk to you next week. Maybe I'll get in touch with you with the schedule, but it'll be an exciting week next week with the elections and also this volatility. So we'll be in touch. Have a good weekend. Thanks.
Have a great weekend, sir.
Group. All right.
Bye-bye.